Dirty dealings, corporate battles, consumer woes. This is Evening 5. Technology and semiconductor-related stocks on Bursa Malaysia surged on Wednesday following the results of the 2024 US presidential election. The FBM Technology Index, tracking 48 tech-related stocks, climbed as much as 6.18% to 66.67 on Wednesday. The FBM KLCI also gained 0.83%, reaching 1,634.17. Most analysts told The Edge that Donald Trump's expected policies as the 47th US president may have a mixed spillover effect on Malaysia, the US's 17th largest trading partner, particularly in the semiconductor sector. At Wednesday's close, the tech top gainers by value on Bursa Malaysia include the semiconductor packaging and testing services provider Malaysian Pacific Industries, which closed up 80 sen or 3.13% to 26 ringgit and 36 sen. Meanwhile, the most actively traded tech stock was new Ace market entrant 3Ren that closed at 39.5 sen, 41% higher than its initial public offering price of 28 sen. This was followed by automated industrial system manufacturer Genetech Technology, which jumped 26 sen or 38% to hit a 3-month high of 88.5 sen, with 105.75 million shares changing hands. In a flash note, UOB Kay Hian cautioned that while Trump's win could benefit Malaysian tech and glove industries through potential trade diversion, his proposed tariff hikes, including a potential 20% blanket import tax and 60% on Chinese goods, might have a mixed impact. UOB KH Director Vincent Khoo expressed caution, suggesting it may be premature to fully link the tech rally to the results, saying Trump's recent rhetoric could just be empty threats. Meanwhile, MIDF research said that while increased market volatility is expected in the near term due to the US presidential election, the Federal Reserve's decision following the Federal Open Market Committee meeting is likely to have a more significant impact. Despite the recent job growth declines, largely influenced by temporary factors like hurricanes and labour strikes, the Fed might opt for a modest 25 BPS rate cut instead of a larger adjustment. Bank Negara has kept the overnight policy rate unchanged at 3% as widely expected, as it noted the continued expansion of the global economy and the sustained strength of domestic economic activities, with inflation remaining modest. The benchmark interest rate decision was made by the Monetary Policy Committee at its meeting on Wednesday. The NM said that at the current OPR level, the monetary policy stance remains supportive of the economy and is consistent with the current assessment of inflation and growth prospects. It added that the MPC remains vigilant to ongoing developments to inform the assessment on the domestic inflation and growth trajectories going into 2025. A Bloomberg poll of economists showed all had expected the central bank to leave the benchmark interest rate unchanged. Global growth is expected to be sustained by positive labour market conditions, moderating inflation, and less restrictive monetary policy. On the domestic side, it said the latest indicators point towards sustained strength in domestic economic activity driven by resilient domestic expenditure and higher export activity. Going forward, exports are expected to be supported by the global tech upcycle, continued strength in non-E&E goods, and higher tourist spending. Employment and wage growth, as well as policy measures, remain supportive of household spending. The robust expansion in investment activity would be sustained by the progress of multi-year projects in both the private and public sectors, the higher realization of improved investments, as well as the implementation of catalytic initiatives under the National Master Plans, BNM said. Headline and core inflation, which it said remained modest and averaged 1.8% year-to-date, is expected to remain manageable going into 2025 amid the easing global cost conditions and absence of excessive domestic demand pressures. The ringgit's performance, meanwhile, continues to be primarily driven by external factors, adding that the outcome of the US elections could heighten volatility in the near term. Fraser and Neve Holdings has flagged that its cash flow will be affected by the delayed start of milk production at its integrated dairy farm in Gemas Negeri Sembilan due to the sudden suspension of imports of dairy cows from the US due to concerns over an avian flu outbreak. Milk production at the farm was supposed to begin in January next year, but now the group is expecting a delay of 6 to 12 months due to the import issue, its CEO Lim Yu Ho said in a post-earnings briefing. Given that the barns are all ready, Lim said the group's cash flow will be affected affected during this period. He said that the Department of Veterinary Services had suddenly issued a letter on October 24th to cancel import permits for dairy cows from the US just 2 days before the scheduled boarding date for the cows on October 26, leaving the group with limited time to address the department's concerns. The group is now in talks with its vendors and regulators in Malaysia to explore alternative sourcing options. The pregnant heifers, a total of 2,500 originally meant for the farm, will now be sold in the US domestic market. Separately, Lim expects 29% of the company's workforce to be affected by the proposed increase in the minimum wage to 1,700 ringgit from 1,500 ringgit, as well as the mandatory Employees Provident Fund contributed for foreign workers outlined in Budget 2025. The Employees Provident Fund has set aside a provision of 24 million ringgit following an accounting adjustment at its Battersea JV firm. The Ministry of Finance said the provision was attributed to EPF's 20% stake in the JV firm, Battersea Project Holding Company. PPH has, in the quarter ending June 2024, allocated 120 million in provisions for the rental agreements based on the International Financial Reporting Standard 17 accounting standard, which came into effect in January 2023. PPH owns the London's Battersea Power Station property project, a major redevelopment initiative in the UK launched in 2022, and a Malaysian JV between EPF and SB Setia Sime Darby Property. MOF said this accounting provision includes the rental guarantee for the 50 Electric Boulevard Phase 3B, an office building recently completed but not fully rented. It said the total IFRS 17 provision is expected to decrease over time as the occupancy rate at 50 Electric Boulevard increases. MOF said that Battersea, in which EPF holds a 35% stake, has fully leased its office space with tech giant Apple as the main tenant. Meanwhile, retail occupancy currently stands at 95%, reflecting solid progress. Foreign worker recruitment platform operator Bestinet's founder Datuk Sri Aminul Islam has denied any misconduct and direct involvement in the recruitment process of foreign workers. This follows a Bloomberg report linking him and an associate to an investigation of alleged money laundering, extortion and trafficking of foreign workers. The digital platform is known as the Foreign Worker Centralised Management System, or FWCMS. In a statement, Aminul's lawyer Datuk N. Sivananthan said the digital platform operated by Bestinet is designed to protect foreign workers and minimize the risk of exploitation. He added that Aminul is not involved in activities beyond the officially sanctioned scope of Bestinet's technology services. The statement clarified that neither Aminul nor Bestinet engages in recruitment processes or has any direct interactions with recruitment agencies or potential hires in Bangladesh or elsewhere. Bloomberg reported earlier that Bangladeshi police had requested to Malaysia to arrest and extradite 2 individuals, including the company's founder and shareholder Aminul, who was alleged of extorting Bangladeshi workers coming into the country. Bloomberg said that the police in Bangladesh had also asked Malaysia to stop using Bestinet software, which has been used at least since 2018 by the government in processing foreign workers that entered the country. Bestinet's contract, which ended in May this year, was extended in principle by the Cabinet sometime in the middle of this year for another 3 years. Prior to that, the 2022 Auditor General's report, which was released in 2023, revealed that there were no signed agreements between the government and Bestinet, which meant that Putrajaya's rights were undetermined.